And welcome to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. It is the 15th of July, 9 a.m. GMT. What are we going to be talking about today? So if you're not unfamiliar with the Markets in 3, it's where I break down 3 things. We talk about the chart of the day. We talk about the big story that's driving Forex markets right now. And we talk about a skill of the day as well, which is going to be something that upskills you as a trader. So the first thing I wanted to talk about today was the pound. The title of this stream today is Will Pound US Dollar Trade Higher? And I'm going to present some evidence today of why I think that could potentially happen. So first of all, let's kick it off with why pound could be strong, or is pound even strong at the moment. So I'm going to bring over the currency strength meter first, just to highlight to you that we are seeing strength in the pound. It is currently the strongest currency from my currency strength meter. You can see that it's currently +7 at the moment. So when a currency reaches this stage, you look at it in one or two ways. Obviously, because it's +7, it is the strongest currency out of the G7, right? However, it does mean that it's more vulnerable to reversals too. So you can see when I've got my trade signals tab at the bottom here, you can see that I have two different sections. I have the trend signal and I have the reversal watch as well. Okay. So what this is showing me is that pound Aussie could potentially go long, as well as pound Swiss, because the Swiss franc and the Australian dollar are the weakest currencies at the moment. So pairing strong against weak, it's talking about that, but it also appears on a reversal watch as well, because the pound is so strong. Now, when you come down to the historical strength area down through here, I'm just going to open it up to a 3-month window, and I'm just going to take off all the other currencies apart from pound, right? So this is what I mean by sometimes that strength can reverse. So back here on the 2nd of May, we actually saw that pound was +5. Now you can see there's like a grey dotted line across this table at the bottom, one starting at +5, one starting at -5. And when it gets into that area there, it's almost like at an extreme place, right? So what we saw after the 2nd of May was actually pound weakened until the 16th of May, where it came into the -5 level, which then it rallied from there and continued to form some strength. We dipped a little bit on the 13th of June, and now we're back up as a strong currency. We didn't really get below zero after that move higher from the 16th of May. And pound has been finding some strength. You know, it was very, very weak. If I take a look at the 6-month move as well, we can see that pound has been moving through that strength and weakness quite nicely. So that is one reason why I like the idea of being a buyer of pound. Obviously, with an air of caution that we are at +7, so it is stronger than the rest of those G7 currencies at the moment. The other thing that I like about the pound is what has been happening from a commitment of traders point of view. I'm just going to bring in that, as well as a seasonal chart. Okay. Whenever I do analysis, I like to try and formulate like a bigger picture thing. So I always like to look at multiple different variables. I like to look at sentiment. I like to look at currency strength and weakness. I like to look at the macroeconomic data as well. So taking a look at here at the pound, British pound sterling futures contracts with the commitment of traders, we can see here that actually when I look at the non-commercials, right, they were heavily short back just 2 weeks ago, right? And this was actually a signal for us to be a buyer of the markets. The reason being is because when we do see an extreme like this form, we can see price rebound. So a couple of weeks ago, we were talking about the fact that we had the commitment of trader report signal showing us that non-commercials or hedge funds or large speculators within the markets, those that are in the markets to make money, have an extreme net short position in the market. And that can often lead to a strong reversal. We obviously saw that the pound was getting stronger on the strength meter as well, which is why we wanted to be a buyer of the pound. Just to kind of look back at historical levels here, we can see that actually, look, if you look in 2019, we had a very similar position where net contracts were below that 100K level or minus 100K level. And look what happened to price in 2019. It bottomed out and the market rallied for, the rest of the year, essentially. So around that time, it was around August, right? So around about the 19th of August, we saw that rally up to the upside. Now we're kind of trading again at that kind of support area on this weekly chart, and we're finding support again. So we could potentially trade all the way back up into the swing highs here when it comes to the pound from a commitment of traders point of view. And we can see that the contracts now are starting to lift from being short and they're starting to turn a little bit. Now, if we look at the breakdown of the long and short contracts, how are they getting out of those positions? Well, they have reduced their short contracts significantly and have started to increase their long contracts. They haven't increased long contracts aggressively, but we are starting to see that little bit of a move in those long contracts as well. Let's take a look at seasonals as well. I love looking at seasonals. I do feel like the markets react to this seasonal analysis. So what I'm going to do here is just put on all years, right? So what this chart here is showing us is the current year's price action, which is this green line, right? And all years, which dates all the way back to 1976. Okay, so a lot of data within this. And what it shows that usually, typically between July and August, we actually get a bull run in the pound, right? And you can see price has a 78% correlation with all years data, right? So all years data, seasonal data, and our current year data has a 78% correlation. So that's pretty strong, right? And July looks like we do get a strong bullish run before it starts to turn in August and see a move down. So we've got some things that we can put in our favor here. First of all, we've got the currency strength meter saying that pound is strong. We've got seasonals saying that typically in this kind of correlated years with the all year seasonal, we see a bullish run in July. We have the commitment of traders report telling us that there was an extreme positioning from the hedge funds and large speculators, which suggested that that could be a short squeeze and we could see price move higher. So we have all these different things kind of coming together. If we take a quick look as well at the interest rate tracker from Financial Source and take a look at the BOE, there is an 84.8% chance of a rate hold, a 15.2% chance of a hike, and a 0% chance of a cut. So what does that tell you? Well, it tells you that actually they're leaning a little bit more hawkish, well, neutral to hawkish, right? So they get a sort of neutral rating from the scoring here from Financial Source, and that's because the majority of central bankers are on the neutral side. So there's some notes here that I can just quickly read through. It says the overall tone is neutral because the majority of recent comments from the Bank of England officials reflect a balanced perspective on current economic situations, emphasizing both the need for caution regarding rate hikes and the importance of maintaining financial stability. Governor Bailey's remarks highlight the critical need for economic growth alongside financial stability, indicating a cautious approach to monetary policy. Okay, while there are hints of potential interest rate increases, particularly from Chief Economist Pill, the prevailing sentiment across multiple policymakers leans towards a wait and see approach, acknowledging the mixed signals from the inflation and growth data. Okay, so it looks to me like we are a little bit more on the neutral side of things, leaning towards that kind of hawkish element. So again, kind of putting that all together, we can see why the pound is a strong currency right now, especially if we look across the board. Pound US dollar is up 300 pips from the recent lows. Euro pound in particular, really nice chart to look at for potential opportunities at the moment. That is also down. If I just go to a daily chart, you can see we broke out of this structure here and the market fell quite nicely. Pound Aussie is down at the moment, but that's because the Australian dollar is gaining a little bit of strength with this current risk on situation that we're seeing. And pound Kiwi has fallen because of RBNZ potential rate hikes coming. But if we look at the pound against weaker currencies like the Swiss franc, it is still up against the Swiss franc quite comfortably, up against the US dollar, up against the Japanese yen as well. So I like the idea of being a buyer on pound, but this just shows you that you need to look for pound against a weaker currency, right? So I am going to focus on pound US dollar a little bit. The reason being is because obviously the dollar has weakened a little bit. I'll talk about that in the big story because there were some big moves yesterday. But essentially, I like this kind of weekly range setup that's forming here. So if I just grab a few tools and we'll do a little bit of technical analysis on the chart. When you want to create technical analysis, it's really easy to do, right? So I'm in the MetaTrader 4 platform here. I usually use trend lines as my sort of support and resistance so they don't kind of mark the chart up with too much information. So what I like to do is first is grab my crosshair tool. I like to start from the top and I like to work my way down through price. And what I'm looking for is multiple tests of certain areas so that we can look for support and resistance. So the first area is pretty obvious. It's around about this 137.50 area up to 137.75. I might round that up to, because that area you can see has been tested multiple times. We have resistance here, here, and here. When I look down the chart as well, we can see that we have all these lows around this kind of 131 handle, which is where we've seen that kind of range being developed. So range highs 131, range lows 131, range highs around 137.75. So what I like to do is just adjust those levels just so that we have those in accurate places. So you can go into properties and change those. I then like to add a little price label into it. It's really simple to do. All you need to do is come down to your price label section, which is here. Hang on 1 second. Let me just pop these back up here for a second. There we go. And then all we need to do is edit that arrow, which is always very difficult on MetaTrader. There we go. 137.75 is going to be our range high. There we go. Add that in. And then our range low is going to be that 131 handle. We can just edit that to 131 in there. I'm going to edit that trend line to be 131 and match that. The reason why I like to use kind of like price labels as well is because, on MetaTrader, it can be quite hard to see where the price is if you look over on the right-hand side. And it also helps me to define my zones. So if I want to try and define this zone, now I can just grab that rectangle tool and drag it across that box, right? So it kind of forms this little bit of a zone in here. So I've established that pound is in this zone. So, I want to see how that plays out. How can it continue to move to the upside? So that's the weekly sort of zone played out. Now I can go to the daily time frame. I can have a little look at what's going on from a daily perspective as well. Is price going to continue to kind of create these little bits of movement here that we can see? So it almost looks like an inverse head and shoulders being built in here. We've got the kind of left shoulder around 135. Left shoulder lows are probably around 133s. You've got the head that came down to 130.160, and then we look maybe to be creating this kind of right shoulder. But what is definitely apparent to me is that we do have a strong level of resistance running right through this range. Okay, so it's around about 134.50. So let me just adjust that trend line, 134.50, like so. And we can see that price is running right through that area, and it's coming to it, and looks like it's just giving a slight sort of rejection in and around that zone at the moment. So again, if I just grab my rectangle tool, I can highlight over that text box like this, and then see how that acts as a zone, right? You got support, resistance, resistance, a little bit of support, resistance, resistance, resistance. So if I want to be a buyer of the pound, I've got a couple of options already to me. If price breaks through 134.50, holds on the other side, rejects it, I can look for opportunities to the upside, targeting that weekly range high. My other option now is to wait for a bit of a deeper retracement, right? So looking at this, I can see obviously we found support down here as well, which is around about that 132 handle, 131.50, right? So adding in either another level, or what we can also do just to kind of give us a little bit more accuracy. Let me just type in 130. So actually it's 131.75 would probably be the level of interest there. Let me add another label in. 31.75. So this is why MetaTrader 5 exists. Trying to select these arrows on here can be a little bit awkward. Doesn't want to be selected, right? The other thing we can do is go to charts, objects, object list. We can go to arrow. Which arrow is that? Okay, it would help if it told me what the arrow was. I'm guessing it's this one, yeah, 131.75. Okay, great. So there we go. I can then draw a rectangle across that as well. Again, acting as a zone. One thing we can do, let's add the adjustable market profile to the chart, and let's have a little look at our adjustable market profile. I just want to see where those kind of key levels are. So we can actually see down towards kind of 132, we do have that kind of point of control area in there. So another option for us is if pound does break lower, head towards 132. I like the idea of potentially being a buyer around that area as well. It has to obviously break through a little bit more of support first to get down to that point, but reward to risk wise, that would be a better choice for us in terms of a larger trade. We actually draw the market profile over the kind of current sort of downward move where we had the highs forming around that 136.70 and the lows down towards that 131.75. You can actually see the point of control is where price is finding resistance right now. So it's actually broke into this value area of that kind of downward swing move into that point. So if anything, we're kind of like trading between that value right now. So that's why I quite like the idea. If price can break through 134.50, break through the value area high, then maybe we can look for a little bit more upside into the 136 first, and then up to that weekly high of 137. So keep an eye on pound. That's what I'm looking for on this market in particular. There are other markets we can look at as well. Euro pound is a particularly good market we could potentially look at as well. Euro not doing so great in terms of currency strength and weakness. We can see that we've been developing this sort of descending triangle pattern for a while, and the market recently broke out of that swing low, and looks like it could potentially continue a little bit lower. We obviously have all this accumulation down here in the past as well, so there could be a point where we see a little bit of a pullback in euro pound for a continuation to the downside. Let me just see if we have any indicators on here. Okay, no. So let's just insert moving average. We'll put the 50 moving average in and insert moving average. We'll put the 200 moving average in as well. So we can just see where price is at. So yeah, the 50 moving average is currently trading around about the 0.86 handle. So that'd be a nice area to see price kind of come into and reject. Whether we get that or not, we'll have to wait and see, because this, you know, if the pound does become a bit aggressive here, we could probably see some further downside. But I'll be watching this 4-hour chart. If the 4-hour starts kind of producing higher highs and higher lows, that's good. I want to see that, because that means that price is in a pullback phase. Maybe we don't get above these kind of recent swing highs, which is around about that 185.75, before seeing a little bit of a rejection in there. So I'm going to set an alert actually around about 85.75. Let's see if price can come up into that level, and let's see how it reacts, because that would be a nice sort of reward to risk trade. Obviously, the second level of interest would be more towards that 0.86, where we can see that kind of accumulation on the way down. Let's just quickly pop the adjustable market profile on the screen, and then I'm going to hit P. And do that. Okay, yeah, great. Look, you can see that sort of high that I mentioned, that 85.75 area, you can see that's where volume really drops off. Okay, so that can be sort of like a edge of a ledge potential trade and move there, where price can come up and reject that kind of edge before seeing a move down, and that 86 area has the point of control. So both really good areas to look at for essentially opportunities in the future for some more downside on euro pound. So really like pound US dollar, really like euro pounds, looking for those kind of opportunities now to see if we can kind of get into any potential trades there. When I'm looking at the FTSE's down a little bit, so I'm not too fussed about this market right now. And pound yen is continuing up as well, but I'm kind of staying away from the yen just in case we do get that kind of intervention move in the market. So let's move on from the pound chatter. We've been talking about that for about 22 minutes now. So let's move on to the big story. What has been happening in markets? Well, if I just go to the majors and have a little look at what has been happening, I'm just going to put it in a split screen view as well, so we can kind of get a bit of an overall view of what's been happening. It's going to take dollar NOK, dollar SEK off the here at the moment. And then just hit refresh on that. And then let's bring in the news. So we've got some big news coming up today, which we'll talk about in a second, right? But I want to just have a little look at what's been happening this week, right? So yesterday was a big day in the markets. Okay, we had not only did we have CPI data, we had Fed Chair Warsh testimony, which was also happening today as well, and we had geopolitical tension and escalations rising in the Middle East. So there's a lot going on in markets, and in those conditions, you probably would have expected the US dollar to strengthen, but it didn't, right? And the reason being is because of this inflation report. Now, if we take a look at the inflation rate month on month, it came in at minus 0.4%. The forecast was minus 0.1. So there was a surprise to the downside of 0.3. Okay, so that shocked markets. Core inflation, which is something that I've been talking about watching, because obviously that takes out the oil price situation as well. That came in at 0%. It was forecast to come in at 0.2%. So that was also another shock in the market, showing that inflation rate month on month, 0. Inflation rate year on year came down to 3.5%, was expected at 3.8, came in much, much lower. Core inflation rate year on year came in at 2.6%. Forecast was 2.8%. Okay, previous was 2.9. So we saw another drop in core as well. So this really drove that sort of initial dollar weakness yesterday and gave a real big punch to the US dollar. We saw gold rally from that $4,000 area. We saw US dollar index fall, euro dollar rise, pound dollar rise, Kiwi dollar rise in particular. Kiwi's been pretty strong recently, and we saw that move too. So that was really what was holding the US dollar down yesterday. Fed Chairman Walsh then did follow this up with saying that we can't just rely on one CPI print to, price in any cuts or anything like that, and still kind of remained pretty hawkish in tone. But that didn't matter. Markets still held that kind of dollar weakness. It rebounded slightly, but it still kind of held that dollar weakness. Now, overnight, we've had the geopolitical escalations once again. We've had reports that the US have been hitting Iran again overnight and adding that they will hit power plants and bridges next if Iran doesn't negotiate. The IRGC has targeted weapons and storage in Bahrain and Kuwait, and US positions in Jordan and the Fifth Fleet Command HQ. So Iran has said it is a mistake to think military action will force them to talk. So the escalations there don't seem to be calming down. So I think we're still going to have a little bit of a battle between dollar buyers, dollar sellers, as the market tries to figure out what is going to happen with sort of future inflation rates. Now, obviously, oil prices off the back of that have been rising, right? They have been moving higher, but that is, I think, really only going to impact sort of headline inflation rates rather than the core inflation rate, which we'll have to keep an eye on, because we do see persistent downside in core inflation. I think we're going to see something quite interesting. Now, coming up today, we have more inflation data. We have the PPI month on month, core PPI month on month, core PPI year on year, PPI year on year. So this is the producers price index. So this is a forward-looking piece of data, right? Because what this is telling us is what is producers expecting, right? What are their inflation expectations essentially going forward, right? If we take a look at it, it says here the producer price index has been rising recently. So the April report of 2026 was 1.4, right? And the expectations today, or the forecast today, I'll just bring it up. Sorry, previous was 1.1. The forecast is 0 today. So they're expecting again to see a little bit of downside. Now, core PPI year on year, really interesting. Previous was 4.9%. The actual forecast is 5.2%. So despite oil prices coming down X, Y, and Z, 5.2% is expected on the core PPI, which is quite interesting considering the fact that the producers, what they do is if prices rise for them and the costs of them to produce products and services increase, what they tend to do is pass that cost onto the consumer. So if we see an increase here, that does usually typically mean that the next sort of one we get would suggest that maybe inflation isn't going to cool as much. So it'll be interesting to see what happens today. The minimum on this is 4.7%. So if we do see actually anything 4.7% or below, that could be compounding that US dollar weakness going into today. And then Thursday, we have some more big data, including sort of retail sales and jobless claims and all that kind of stuff. So really interesting. We'll talk about that a little bit later in the trading week, but today we've got some big data as well, so keep an eye out on that. We'll be across this over on the Telegram channel and Twitter, so if you do want to follow us there, feel free to do so. The Telegram channel, I'll actually pop it in a little thing here. So the Telegram channel, you can join via this link. I'm just going to get the QR code and see if I can pop the QR code here. Let me just grab the link from Telegram. So there's a QR code popping on the screen now. That is our free Telegram channel. We're going to be across this data on this channel there. So be aware of that. We also post our latest analysis, our charts, our impact, sort of our information on news, etc., and our recent sort of video tutorials and updates there too, and our upcoming webinars as well. So if you want to do that, join the Anzo Telegram channel. The QR code is on your screen now. Let's move on to the final part of the day then. So the skill of the day. Sometimes I like to ask traders what they want to do. You know, is there a potential thing that they want to learn about, or X, Y, and Z? I haven't had any information about that yet from you guys. So if you do want to leave a comment on the streams, please feel free to do so. Comment on any of the videos and say, you know, this is something that I want to particularly learn about, and we can take you through that. So what I've been doing over the past few ones is just taking you through a few sort of MetaTrader tutorials. And today is no different. I'm going to take you through another tutorial today. What we spoke about yesterday was how to create a template and how to create your own charts in the MetaTrader platform. Well, today I'm going to show you something along that kind of similar line. I'm going to show you how to set up a profile in MetaTrader. Now, what a lot of traders do is they add all the charts to the bottom of the screen, okay? And what that can do for MetaTrader is actually slow it down, especially when you start adding in objects and sort of drawing tools and things like that, and more indicators. It can slow the program down, and that's not our goal here. Our goal is to try and help us just, you know, trade and etc. Now, what I like to do is set up different profiles. So let's say I'm day trading euro, for instance. You can see here I have a profile set up as euro US dollar day trade, and it has 3 charts in it. It has the 1 hour chart or the 30-minute chart. It has the 5-minute chart, and it has the 1-minute chart, because that's my sort of trading time frame essentially. So what I will try and do is kind of match up those charts and have a little look at sort of, you know, how we trade those as a sort of let me just pop this one in here and then do that. So you can see I have the 30-minute chart on the left hand side, 5-minute chart in the middle, and 1-minute chart on the right hand side. And setting up a profile is really easy, but also very helpful, because it allows you to kind of skip through those things. You can also see I've got a profile that's called pound pairs. So when I click over to that, it's just all the pound pairs in one place. So I can get an overall view. So if I tile the windows here, it gives me an overall view of what the pound is doing against major currency pairs, right? So easiest way to do this is down the bottom of the screen, you'll see something called default, right? So that's our profile area. Now, to set up a profile is really simple. First of all, we just want to select the charts that we want to select. So I've got pound here at the minute. What I want to actually set up is a euro profile with all the euro pairs in. So I've already got euro pound in here, I think, somewhere. No, I do not. So first one I'm going to put in is euro pound. And to drop that in there, and all we need to do, you can do this one of 2 ways. So if you already have the tabs open, just select the tab at the bottom, open your market watch, click and drag. So for instance here, I've got pound Aussie open. I want to change that to euro dollar, right? So I've got euro dollar, euro pound. I've got another pound Aussie chart open here. So I'm going to then select euro Aussie, click and drag it over. The second way you can do this, so I'm just going to close some of the tabs at the bottom. The second way we can do this is by just clicking File, New Chart, and you come down and find the chart that you want. So I'm going to go down to Forex Miner, and we're going to be looking for the next ones, which is EuroCAD. So again, just open that up. Now, this is where our template comes in handy, because if we do File, New Chart, it's going to default back to this chart here, where you've got the grid lines and you know, the bar chart, candlestick the bar charts chart template, sorry. So what you want to do is right click, go down to template and apply your previous template that you've done before. Okay, make sure you kind of hit the weekly charts as well and the monthly charts just to make sure all the information is there. So all we need to do is continue to do that. File, new chart, come down to Forex minor, and we're going to highlight Euro Swiss. File, new chart, Forex minor. We need Euro Kiwi on there as well. File, new chart, come down to Forex minors, and we need Euro Yen. Okay, so I've got all my Euro pairs here. All I need to do now is apply my template to each one. So template, there like this. Right, click on the chart. Right, okay, so what I've got here now is I've got all the Euro FX pairs that I want all in one place. So it's really handy for me to be able to just keep an eye on all the Euro pairs at once. All right. I also like to add in the Euro index as well. So if you go file, new chart, come down to index, we're going to be looking for the German 40 as well. So I'm just going to add the GER 40 on there. That is the DAX. And I'll add that in here as well, because sometimes it's good to see what the European index is doing. Is it strong? Is it weak? Etc. So I have those across here now. Now what we need to do is come down to where it says default, okay, and click on it. Now, once you click on it, you can see that it says save profile as, right? So that's what I'm going to click on, save profile as, and you get this little pop-up box. So here I'm just going to put Euro pairs, okay, and select OK. You'll see that it changes from default to Euro pairs now. But what this allows me to do is kind of switch between them. So if I want to switch between pound pairs, I can. If I want to come back to Euro pairs, I can. And it will just open up here. I can tile them as well so that I can see them at a quick glance, what they're doing. Each currency pair is doing. Okay, so this is really handy when you want to kind of set up different charts. So you can also see I have a couple of day trading situations here. I've got gold day trade, right? So I can click onto here. I know exactly what this chart is looking at. This is my 30-minute chart of gold with my market profile on. I can add another adjustable market profile here. Double click. I can even come away from this now. So let's say I want to quickly look at sort of Euro day trade. I can go over there, see what Euro's doing, come back to that gold one, and you'll see my market profile that I just applied is still there. So the profile saves as well. So it's a really, really handy tool for you to look at. You know, really nice movement here on gold recently. We've come down into the point of control, you know, potentially a short bounce could form at this point. So that's it for me today. We've talked about sort of the pound strength in the market. Will pound US dollar trade higher? I'm looking for that potential move. We've talked about how to create a profile in MetaTrader, and we've talked about the US news that occurred yesterday and how it's driving US dollar weakness in the markets. If you want to join the Telegram channel, the QR code is on the screen. I'll see you in there. My name is John, Senior Market Analyst here at Anzo Capital. Hope you have a great trading day, and I'll speak to you soon.